So, Chris, what does this mean for the Fed really walking this line then between sort of helping to create some of this volatility while also trying to create stability at the same time?
Yes, I think it means that on some level, I think that the modern Fed has always they've tried to be as transparent as possible, but sometimes forward guidance is not a good thing when the backdrop is so uncertain, right? Just like we talked about a few minutes ago with how much expectations changed during the Fed's quiet window. I think the Fed is going to have to be really careful about forward guidance here and potentially not give a whole lot of it because they're not omnipotent. They don't know what's coming down the pike, and I think they want to keep their options open. So I think they're going to have to be very, very careful about what types of information they're going to give to the marketplace. I also think that they have to strike this balance of making sure that the public understands that the government is on the case as it relates to these bank runs, and that that they're not going to allow them to seep deeply into the the globally systematically important banking system where the majority of deposits now are. But at the same time, they have to convince the market that they're not, giving up the inflation fight. My personal view is if they halted interest rate hikes at this week's meeting, I actually think that risk assets might rally at first, but then might actually panic because now they'd be saying, well, what does the Fed know that we don't, if they're going as far as to give up their fight on inflation here. So I actually think that they have to strike a balance. I think if their message is too far towards price stability or too much towards financial stability or inflation stability, either too much in either direction, I think is going to be tough for the market to take. So I think they have to be very, very balanced in their statements.